Okay, well, I'm going to go to the questions. All right, I closed on a new construction home 3 months ago. The building started 9 months ago. Values went up. Now they're selling the same model home for a lot more. Oh, values went up $85,000. Yeah, we're going to see more of that. Inflation, the Fed is trying to create inflation, and it's going to happen in hard assets. That's just how it is. They're wanting to do it, and they will win that game. So good. I'm glad you locked that in and have made a bunch of money. Good for you. Thinking about selling one of my homes that's fully paid and purchase others for rent. Is it risky to do this during COVID where the rental moratorium is unknown? It just depends on what you buy. Like I said, the property managers that we recommend and that we work with, they are very good at screening. They're looking for people who can work from home, people who have flexibility. They're looking for people who could easily get a new job if they get laid off. So their screening process is very strict. We've had incredibly high collection rates because more and more people are wanting to live and live in a home in the suburbs, and especially a new home. So demand has been massive. So no, I don't think it's risky. I mean, every investment has risk. There's always risk, but if you screen properly, it really mitigates that risk. Let's see, buy nice cheap rentals, give it to housing. Virus proof, get a good property manager. Yes, sounds like someone's advice. Texas property taxes are out the roof. Yeah, Texas property taxes are high. You really need to calculate that in. If you just look at the 1% rule, you buy a $150,000 house that rents for $1,500, it's going to cash flow less in Texas because of the taxes than it might in Florida or Alabama or Georgia, some of these places with lower property taxes. I do still like Texas though. Refi, lower your payment and raise rents. Okay, someone said this is helpful. I'm so glad. Which state in the Southeast would you direct a new investor for great stable cash flow and appreciation? I can just tell you what the data is saying. The fastest growing part of the country is Central Florida. The area between Tampa and Orlando is growing massively. Even Ocala, this little horse town, is here's the thing, is everything is changing because more and more people are able to work from anywhere, and that is a game changer. So more people living in their dream place. So Cape Coral in Florida is hot. Palm Beach, I believe it is one of the fastest growing areas. So think that way, like where is an affordable place that is really a cute town that young people can go move, or anybody can go move to, and would love to raise their kids there because they don't have to live near their job anymore. Am I concerned about investing in Florida due to the climate change? Yeah, we've looked at the maps, and there are parts of Florida we won't invest in. The climate change maps, if you go and you look, you'll see the areas that would be affected over the next 100 years. There are parts of Florida that aren't as affected. So definitely never buy property in a flood zone anywhere. I don't recommend it, but definitely not in Florida and not in Texas, definitely not in Houston. Stay out of flood zones. Then even if you're near a flood zone, you can get flood insurance for very, very cheap. I recommend getting flood insurance, but not being in a flood zone. So there are parts of Florida that are not slated to be affected during climate change. But obviously, if you're going to buy waterfront, that's going to be concerning. We don't do that. Let's see, could you speak to the Phoenix metro area for real estate? Does RealWealth offer properties? No, Phoenix, we really like Phoenix, but for cash flow, we missed that train a long time ago. There could be areas outside of Phoenix where you could still get a good return, but we just took it off our list because we could get such better cash flow and potential for appreciation elsewhere. But I like Phoenix for maybe flipping or moving. Any new markets you're looking into? Yeah, we're looking into Charlotte and parts of North Carolina. We're really looking within all that southeast area where the demographics are moving. But it's amazing, and I want to make sure you know that we feel this way. In our own fund, we have a turnkey rental fund where we buy properties and we manage them for our investors, or I should say Tim Horvath does, who manages our property teams basically. And their method was to buy a bunch of Florida homes for the appreciation and pretty good cash flow, and then offset it with a bunch of Midwestern homes in Ohio and in Detroit, in Chicago, to increase the cash flow so that the investors would get an 8% preferred, and that we would, get some appreciation from the Florida properties. Well, what we found is that Cincinnati, some of these towns that are pretty small, you'll have to definitely listen to the RealWealth show that is not posted yet with the National Association of Home Builders chief economist, because it was fascinating what he said about the Midwest. And it makes sense. Builders have not been building in the Midwest. Builders could not make a profit unless they went and built in expensive areas. That's the only way they could do it. So building just didn't kind of happen in these Midwestern towns so much. But now they're growing. People are realizing, they can live anywhere. They maybe want to raise their kids in a school district that they like. They want more space, and they're going to these affordable markets. So now we're seeing appreciation in Ohio in addition to the high cash flow. So that's really exciting. Same with Michigan. Cincinnati came up as one of the top places to invest today for both cash flow and equity growth. And that's a first. It's just simply a matter of limited inventory. You did not have a bunch of national builders flocking to Cincinnati to build, and yet people are going there. So there's a lack of housing. Are we seeing pricing power and sales for Reno? Yeah. We're about to send the Reno update. We were really terrified to be in the home building business in March. It was like, no. But then when the interest, when the Fed came in, it was really good for us, really good for us. So sales have been really robust in Reno, in Bozeman, Montana, in Tampa. It's really turned around. When do you see the foreclosure starting to happen? This is just what I hear from people like Rick Sharga and people in the, that are in the more of the foreclosure world at auction.com and so forth. It takes a long time to foreclose. Banks are going to be wanting to do loan modifications. They learned a lot from the last crisis. They don't want to go through that again. So it sounded like it wouldn't really start until about March, when the moratorium, picks up and people can't pay, and then it would take like 3 months from them. But in places like Florida, it could take years. It's in the judicial states. Someone said they want to jump in. One question on the impact of climate change on the Southeast. Yep, I already talked about that. There's really good maps on climate change that will show you where they see how homes affected in the next 50 to 100 years. And that can bring a lot of relief. For example, I live 2 miles from the ocean, so I do pay attention to this. And I had my office right on the beach, which I got too distracted, so we had to sell it. Actually, there were a whole bunch of problems with the Coastal Commission there, so we sold it. But my office was right on the beach, and the houses in front of me that were literally on the sand, they were slated. They're in trouble. They're probably in trouble, but it wasn't for, at least according to the map, it wasn't going to be for 20 or 40 or 50 years. But their insurance went up. But us being just across the street, we were not considered at risk, and our insurance did not go up. So in a lot of places, it's going to affect beachfront for the most part, but even us just literally across the street from that, not so much. So just go look up that map, and that might give you some comfort. And then don't buy in flood zones. Thanks for providing us with good information. Oh, you're welcome. Yeah, it's very difficult to get the 1% rule on new construction, but don't worry about that, because interest rates are so low that you're still even getting better cash flow than when we were looking for the 1%. We're going to be talking about that in the next webinar. Non-US loans, go on our website to resources, and you'll find just a whole list of lenders, and hopefully one of them will lend to foreigners. It's pretty tough though. I'm looking at duplexes with great cash flow. Is it riskier investment? I don't think so. No, most duplexes and 1 to 4 unit buildings and any low rise, they still kind of have some outside area, so those are fine. You're not really sharing air. That's the thing about the big apartments. People are nervous about sharing the same ventilation system. Any federal or state law we should pay attention to that can affect homeowner investors? Yeah, so many. We got to pay attention to the laws. That's, so much is manipulated between laws and basically the Federal Reserve. That's what you have to pay attention to. So that is why, regardless of your political beliefs, I'm talking investment now. Nobody is able to guess. Well, you probably can guess my political stance, but I try to keep it out of it, and I really just try to focus on business and what's going to be best for business and for our members at RealWealth. That's what I try to focus on. And I can tell you 100% that politics matters. It matters a lot. That's why we don't invest in California. It's a horrible, difficult place to do business. It just is. It's very, very lots of regulations. We stopped building houses in California because it cost $135,000 just in fees to get started. So, we could go just 3 hours away to Reno and pay $5,000 to $10,000 per property. So state laws, federal laws matter a lot. When it comes to owning rental property, you want to be in states that are landlord friendly. You want to really pay attention to the laws in those states. Would I invest in Portland right now? No, because they are not landlord friendly. Would I invest in Texas? Yes, very landlord friendly. You can call it a red state or a blue state. Call it whatever you want. I don't care. What matters is, does the state you're in believe that a tenant should pay their rent? Be in that state if you are a landlord. If you're a tenant, maybe it's better for you to be in California. So yes, you absolutely got to pay attention to laws. We know that Florida, Ohio, Texas, Georgia, Alabama, these are all places that Missouri, they're very landlord friendly, but it changes from city to city. So Chicago is a tough city. They've got some real problems there with their pension fund, but you can invest outside of the city and not be as affected. So again, just be careful of the jurisdiction that you're investing in as well. Yes, it's a good time to invest in multifamily. I think right now between 20 and 80 units is what some of my multifamily friends tell me. They're already seeing deals popping up because those tend to be owned by mom and pops who were not ready for this. This for 2020 didn't have the reserves, maybe just weren't prepared. So multifamily will be. I think it's a very good time to learn that. Yes. Someone said you initially didn't like multifamily. No, I prefer single family 100%. I think it's easier to get into, it's easier to get out of. People want it. But we also know that if there's a great deal, we'll want to do it. And if there's an opportunity in multifamily, we'll look at it. I didn't think there was very much opportunity over the last few years. I think prices were way too high. People were really depending on rents going up. That's not happening. So it was not interesting to me. There was way more opportunity in single family. We're going to be paying attention to the opportunity in multifamily. With that said, I still prefer single family. It's our asset class that we know and understand. Yeah, Kiyosaki has been promoting a doomsday scenario, but a lot of people have been for a long time. And I followed that approach for a while because I listened to a lot of those guys. And I think it's really important to pay attention to the possibility of a doomsday scenario and what you would do. Are you prepared for that? I mean, we're in one. So are you prepared? Do you have cash reserves? Do you have gold? Do you have, did you buy the right properties in the right markets? These are all good questions. Are you invested maybe outside of the US for more diversification? So do I think that we're in Armageddon? No, I do not. But having been through being as old as I am, every few years there seems to be some kind of Armageddon. But you get what you focus on, right? Do you have a Havanese? Oh, yep, she's back there. That's Luna. She's yep, she's a Havanese. Cash flow, yep. Okay, what are your thoughts on the Southeast? Yes. Love the Southeast. Best areas to purchase for long-term growth and low turnover. Like I said, the Southeast, but we also love the Midwest as well for the affordability. Um, let's see, low turnover rate. Low turnover rate really just depends on what you buy and what you buy near. So just make sure that you own property near jobs. I would say even if you're buying in the suburbs, if it's a place that has a cute downtown, people like that. Like I think Chico, California is going to be an area that grows. It's got a little creek running through it and really good restaurants. It's a college town, but it was kind of out in the boonies. It's 2.5 hours from San Francisco. Well, now if you can work from home and you can own a house for $300,000 versus 2 million, and you only have to go into work once a week and it's 2-hour drive, people might do that. So look for the areas that are just kind of are nice little towns. College towns are great, and but that are near the metros that people can drive to if they have to go into work like 1 day a week. Investing out of the country, yeah, I really want to understand it. I don't. We do have a syndication in Costa Rica, but it's very different, very complicated. So make sure you have good people. Updates on the last syndications, you should be getting those. They come out quarterly, and we're at that quarterly mark. So I know Anne and our new manager of syndications will be sending out those updates within the next, probably this week or next. Someone said, yes, Ohio's been great, made cash flow and appreciation there. One of the big changes this time around is that bank lending standards are much tighter. That is huge. Yeah, I didn't even mention that. Over the last 10 years, banks have made it so difficult to get loans. People who had to qualify had very, very high credit scores. They had savings, low debt to income ratios, very different scenario than last time. These are people in forbearance today really just, it's to no fault of their own that they're struggling. They literally, people were getting arrested for going to work, for trying to open their businesses. I mean, that is not their fault. So that's why I think there's going to be a lot more forgiveness, because these are generally people who've paid their bills, they've saved, they've been, good citizens and good credit, they're credit worthy. They just got hit hard, and again, it was government regulation that kept them from working. So a very, very, very different scenario, and hopefully they can get back to work and save their businesses. Any recommendations to getting a loan if you're not a W-2 employee? Lenders are so strict. It is really hard. I actually just interviewed somebody who might be able to help you. If you just go to the resources page on our website, there is a list of lenders, and it'll say non-conventional on there. If you don't have a W-2 job, it is definitely harder. Okay, that is all in the questions. No, it's not. Oh, there's more questions. I'll just do a couple more. Advice for borrowers who max out on their 10 conventional loans. That's when you go to non-conventional lenders, and you might pay a little bit more. It might be just like a 5-year loan, but there are more and more. There are loans for commercial lending. You can also just start talking to people. If you already have 10 properties and you've maxed out your 10 conventional, or if you're married, you can even get up to 20, 10 each. If you've owned them for a while, you should be pretty well seasoned. And at that point, you might go to somebody who's got an IRA and is really, really scared. They're wanting to retire and they don't want to lose that IRA. They could self-direct and lend to you at 5% or 6% even, and they're getting a nice solid return secured to your real estate as a note, and you're getting financing. We've seen a lot of people do that. So just start talking to people. Okay, someone said you go to our list of lenders. They're really great. They can help you out getting good rates. Does RealWealth have a team that can help with the BRR strategy? And the answer is very soon. We're going to be sending out an announcement. I'm going to be doing a RealWealth show. We're going to be letting you know about our new program, our certified agent program. We're expanding. We're looking for agents nationwide. We now have a national brokerage, and we're looking for experienced, really good agents who can help people find investment property nationwide. And those people would be able to help our members find properties that are great for the BRRRR method. BRRRR method it's basically where you buy the property and you hire a contractor to fix it, or you fix it yourself and then refi, get all your money out of it and do it again. If you're doing it not where you live, you have to completely depend on someone else. It's much riskier. I do want to make sure you know that. It's better to buy the house already renovated because you can get all the inspections and the appraisal when it's complete. But if you're in the process, things come up, they always do, and you might not have the funds for it. So I'm not a huge fan of the BRRRR strategy out of state because you really need to be able to depend on your team, and it could end up costing you more in the end. But we are looking for really good agents who can at least find you those properties. Commercial syndications always just depends on the underwriting and the asset. I wouldn't be jumping into office buildings or retail right now. Do you ever take into account how the Board of Supervisors in particular town handles real estate laws? Absolutely. You've got to pay attention to it. I'm closing on a duplex. Are the rates higher on a duplex? I don't know. Maybe, but talk to your lender. We have a list of lenders on our website who specialize in investment property and hopefully can help you. Is Dallas a good place to invest? Dallas proper has become very expensive, except in certain neighborhoods. We do have a Dallas property provider who's found little pockets around, on the outer lying areas in Central Texas who our members are really happy with. So if you go online, you can find her contact information. Where would I find more info on new construction syndicating? For us, you can go to RealWealth Developments. It's a new webpage we have that shows all of our syndications on development. We don't have any syndications right now, but you would need to fill out the form there so that you can find out about future ones. How would you define being over leveraged? I think you should always have 6 months reserves per property. Just imagine that your tenant can't pay you for 6 months. Make sure you have that money set aside, and also for repairs. I don't care if you do 100% leverage. I don't care if you borrow 100% on the property, as long as you've got the money set aside for repairs and payments. Oh, thank you. This is being recorded. It will be uploaded, and you can listen to it again. Do I like Utah? I love Utah. It's a great market. It has been difficult to find cash flow property there, but if we can find a great team, we love Utah. And as we expand into our certified RealWealth agent program, where we'll have agents across the country who specialize in finding you investment property, that it may not be renovated. It's not like the white glove treatment you get from the property teams we have now. It would just be agents that can find you find you properties nationwide. Then we'll hopefully have some good agents in Utah. Okay, well, thanks everybody. Best way to get started, definitely read my book, Retire Rich with Rentals. Make sure you download the checklist from our website. Make sure you talk to an investment counselor at RealWealth and listen to all the webinars that we've got posted. We have so much education that's free. It is our mission to raise the wealth consciousness of our members. It is our passion. It's our team. We don't make money from it, but we love doing it. And I can't even tell you, the investment counselors are so excited right now working on next week's webinar that they're not even getting paid to do. So they love doing it. We love sharing information. There's so much of it on our website. So just start there. All right. Thank you. Wonderful. Thank you all so much. Really appreciate you being here and staying overtime. Take care. Have a wonderful rest of your day. Bye-bye.